Kalimera Seolus, Kalos Irsates to Snappi Hub. Good morning, everyone. Welcome to Snappi Hub. I'm Piret Reinson. I'm responsible for corporate communications at Snappi. And I'm happy to make this intro for our visitors and our YouTube watchers. This hub is actually free of charge co-working space for Snappi customers in the heart of Athens. And also, this is the nest or our contribution to the ecosystem, because we host here these full of insights, inspiring events in order to empower everyone, not only Snappi customers, but the whole ecosystem, because we believe that something grand, great, beautiful can come out of this country. So this is our third thought leadership session, and I have an honor to have here Gabriella Kindert, our CEO, who is moderating this session, Dr. Pylarinou, originally from Greece, but living in Switzerland, global Fintech thought leader and advisor, who also writes several books. We have a surprise for you also later. And Mr. David Gyori, CEO at Banking Reports. Once again, this session is recorded because we believe it's really visionary. We are talking about the future. So we want everyone to hear who is interested. So we end this after 60 minutes, and then we start very open Q&A session. So I hope you will enjoy, and I will give the word over to Gabriella.
Thank you so much, Piret, and thank you, distinguished guests and speakers, to join this session. I'm really delighted. You have thousands of followers on LinkedIn, so I think we are at the right spot with the right audience to speak about the future of banking. A lot has happened in the last 2 decades in banking. It has not been very easy. And I think the most important changes are still about to happen with AI and further digitalization. So we are going to speak a lot about what digitalization means for the banking sector, trust, AI, leadership. We are covering a lot of blocks here in this coming hour. So first, let's speak about trust. What does trust mean today in 2026? Effie.
Well, trust is not at the heart of banking or financial services. I would say it is the heart of banking and financial services. And, you know, we've been talking about this over the past 2 or 3 decades with the advent of all these disrupted fintechs that initially were going to destroy banks, eliminate banks, but none of that happened. But definitely what they did is they shaped what we call, or what is called, the experience economy. And the truth is, even through that, trust remained with the incumbent banks. But now, with the advent or the early days of the agentic economy and the tokenized world, I would say that trust is redefined, so we need to think of it as the heart. And the heart, even in the medical profession now, is recognized. It's not just a muscle, a pump. It's a brain, a hormonal center. It's everything. So the analogy holds for banking too. Trust is redefined, and we're going to talk about this. How do you earn trust? Because trust is not something that you program. You earn it. And the way you earn it now is going to be different than the previous 2 decades.
Yes, sorry, just one thing, like, why is trust important? Because it's very important that we all understand that we are talking about an essential infrastructure here. Finance is an essential infrastructure, like electricity grid.
Yes.
So without trust, there is no banking system, no financial system.
Right. So why is trust so important? With payments, we can get the people. Payments is the decoy, or as we talked before today's speech, the Trojan horse. We get the people with the payments, but on top of payments, we want to build high-quality assets and liabilities. Now, on the liability side of a bank's balance sheet, we sort of understand why trust is so important for people to put serious deposits, serious savings into an institution. You need trust, and we understand that, and market-leading incumbent players in banking are masters of that trust. You have to have the cheap, large, stable deposit base. Why is it cheap? Because of trust. If people don't trust an institution, they don't give their savings, their liquidity, serious liquidity, for a relatively low price to that institution. Now, counterintuitively, trust is equally important on the asset side. Why? Because we can only be selective, high-quality lenders, selective lenders, not to push money out, but to look for quality borrowers if we have the stable, cheap deposit base on the liability side. So we have to learn to build real banking-grade balance sheet banking, not payments only, not e-money institution, not mobile wallet, balance sheet, classic banking level, deep, stable trust in a digital-only environment. We
Which is a
need
big
trustworthy people. We
Yes.
need time. Building trust takes time. We need
Earning
trust.
Earning.
Losing trust can happen quickly,
Yes.
but building it takes time. So we need strong minds, strong hand. Apologies.
Yeah, no, but there is somebody we have forgotten here, the regulator, because you are putting the deposits in because you know that your deposit is guaranteed. And this license is very expensive. If I look at neobanks, tell me what your figure is. I think 70% of the people are employed because of regulatory constraints or regulatory reporting or regulatory constraints in a way, right? Compliance, risk management, the way how you need to report to regulator is very tough.
And by the way, there's two things that are constant. One is what you referred to before, which is that financial services, banking, is the backbone of every economic activity, and that does not change whether we're talking about digital or whatever on another planet. That's never going to change, one. And second, the regulatory reporting and those requirements are also never going to be reduced. Every day they are increased because of sanctions and geopolitics, because of jurisdictional disharmonies, and the need to go global or cross-border. Complexity is increasing. And we do hope that AI will help us on that in terms of the unit economics, but we are far from that yet. There we will see. For now,
Very provoking question. Do you think that the young generation, do they trust banks, the incumbent banks or neobanks, or do they trust more Apple and Facebook? And how is trust shifting here in the mindset of the new generation?
Well, I mean, COVID showed us it was an experience that we didn't ask for, but the numbers are clear there. The deposits that went to the incumbent banks, if we look at the US market, which is a very mature and crowded market, they went more to incumbents. That weren't actually very well prepared for that digital-only situation, but the trust was there. And it wasn't like everything went to the neobanks. The trust about, the big tech is there, but it's it's reduced.
What's your opinion, Effie? Why Apple and Facebook, why haven't been so successful in the banking side?
Well, you're opening a black hole. First of all, if we look at why Libra, which was a Facebook led project, and I was very close to it because of being based in Switzerland. Why did it fail? It was really a regulatory pushback. It was too early, and because of geopolitics. 3 things, right? And because of trust. The other, if we look at Apple, Apple on one hand is actually one of the biggest, I would call them, fintech players.
Yes.
If you look at Apple Pay, their credit, and so on. But look at what happened when they launched the Apple Card in collaboration with Goldman Sachs. That's a great example of the issue that we should discuss, which is, are banks dumb pipes? And what does embedded finance mean? Because that's an embedded finance situation, right? They issued this Apple credit card, Goldman Sachs was behind, and in the end they found that there was an algorithmic bias against the women, so there was a couple that would apply for the credit card and the husband would get accepted with a much higher, 3 times more higher limit than the wife. That is an example of the hidden bias and the fact that it goes back to the financial institution to develop that trust and the intelligence.
Yeah.
So things are not as simple as they appear.
Yes, so basically, US technology giants, they did quite a lot in financial services. As we know, Chinese technology giants did infinitely more. I am just back from China. I did 2 works there in the past 2 months, Shanghai and Shenzhen. I have had the privilege to visit, for example, Tencent, which owns WeChat Pay, which owns WeBank. Tencent owns WeBank. WeBank, digital-only bank, 500 million clients, 0 branches. Well, we will not reach 500 million clients with the European license because we unfortunately cannot cover every adult and minor. But the license is hard to get, therefore extremely hard, extremely costly. That is a moat, that is a protection. By the way, there are many mid-sized economies, no major economy, but many mid-sized economies without deposit insurance. So trust works even without deposit insurance. Of course, the people are more consciously selective in that case where they put their money. And the Chinese technology giants are very, very active. However, now, in the past years, we have entered a worldwide situation of geopolitics, geopolitical risk, sovereignty, data sovereignty. You have mentioned financial services. This is a critical infrastructure. So we need a Europe-wide solution, and actually your license beautifully, potentially predestines us exactly for that reach. So basically, the value of the license is huge in this case, and I believe that we have to have traditional trust, bank-type, bank-grade trust, plus digital excellence and digital trust. For example, how much the app is reliable, how much we can avoid downtimes, or if we have downtimes, how elegantly we can communicate it and honestly. By the way, I also did a work in the past month in Singapore. Monetary Authority of Singapore, MAS, one of the best regulators internationally, introduced a regulation that a licensed bank in Singapore can have a maximum 60 minutes of downtime per year. If they have more, they impose fines. And actually, they imposed a huge fine on DBS Bank, the market-leading bank, exactly for these reasons. And this resulted in cutting the bonus of the CEO in the last year when he was CEO. He just stepped down. Piyush Gupta, a legendary CEO. So these things are coming. We have to have bank-grade trust plus digital trust.
To add to that, there's an epidemic in the US going on right now, and everybody wants to get a bank charter, a national bank charter, and actually the regulators there have awarded these charters because they're being more lax. But it shows you again that players in the financial industry, the innovators, see the value nowadays of obtaining the regulatory approval depending on what they want to do in order to be able to offer trustworthy financial services.
And of course, the barriers of entry are pretty high, yeah? So it's not easy to set up a bank. It costs a lot of money. We are getting a lot of criticism, everybody, why it costs so much money. But reality is that it's good that it costs so much money, otherwise everybody would be doing banking, right? Yes. So let's talk about banking and neobanks. And everybody knows about the latest neobanks, like Snappi as well in Greece. We are built on the latest infrastructure. We are very proud of it. How can we be relevant to clients? What are the new neobanking trends? Maybe we can start with you, Effie. How do you see the landscape changing today?
Well, first of all, let's look at Europe because it's more relevant. If you look at the successful neobanks, whether you look at them in terms of the number of clients or the profitability, and by the way, you know, globally the profitability of neobanks is not doing so well. Over 70% are not profitable yet, and that is becoming, I'm not talking about neobanks that are 1 or 2 years old. I'm talking about, you know, 5, 10 plus, and they're not yet profitable. But what we have been seeing is there isn't one model that is the successful dominant model. You see different types of models that have been developed. And again, I'll only talk about Europe. If you look at Revolut, for example, you can think of it kind of like a super app. I don't like to think of them as a super app, but let's call them, I like to think of them as a platform that is mainly subscription-based and has more non-financial products than others. And then you can look at players like Starling Bank, which is more like a marketplace. They have an important banking, a B2B offering where they offer their engine to other banks. You can look at Quanto, which is another niche area of business banking. You can look at Bunk, another niche there. So there isn't one model. One thing that I have found as the common thread of these successful European ones is that each of them has built their own core and enterprise architecture in-house, and it is in alignment with their long-term strategy, not only with how they began, because they all began differently. Revolut started with an FX product, right? The Starling, it's very different positioning.
So this in-house means a lot because they're in control of their own development, control of their own destiny, right? That's what you want to say.
Yes, their own destiny, and it's this architecture that makes a lot of sense on how they are expanding after they launch. They have, I'd call it a unified way of looking at their customers, their products, and everything. And hopefully, that will enable them to take the next step of the AI transformation, which requires to think beyond products and create intelligence in the architecture. It's not so evident. Modularity and being on the cloud may be a prerequisite, but it's not sufficient, and we'll have the opportunity to talk about it. So for me, this is the core of what is happening.
David, I have a very specific question to you. You know a lot about this, and we need to be a bit more specific. Which neobank do you think will survive in 2020? 2030, sorry.
Which neobanks will survive
in 2030?
30. Okay. Well, I am very critical about current existing examples. By the way, first of all, neobank. I don't like the expression because often non-banks, entities not owning a banking license, are categorized as a neobank. So what I like is e-money institution, mobile wallet, stored value facility, prepaid card, this category, versus digital-only bank, which is Snappi. First of all, I am a big fan of Wise. You know Wise, ex-transfer Wise, but it's an EMI, it's an e-money institution, it's a bird without wings. The wings are assets and liabilities, leveraged balance sheet, net interest margin. We need that. We have licensed major digital-only bank in Europe, Revolut. However, I am a fierce critique of Revolut, and I don't want to comment on whether they will be around in 2030. I will not take a stand on that, but linking it back to your prior question to Effie, what are the secrets of success in digital-only banking in the first place? Avoid the big mistakes, avoid the big sins. Do not touch crypto. Apologies. You know who touches crypto from the entities I have listed in the past 10 minutes. Okay, do not touch crypto. Do not print credit like it's thin air. Lending has risks. Technology doesn't eliminate lending risks. Technology is an enabler, but good old credit risk is still there. So the first step is avoid the big mistakes. The second step, my mania, we talked about it before today's discussion, strategic patience. Strategic patience. We don't necessarily want to win everything tomorrow. We want to be around. We want to be around in 2030, in 2035, in 2050, in 2055, in 2070, in 2100.
It's very true what you are saying, David, and very often these entities are owned by venture capitalists, where short-termism is so present, the next one and next one and next one, and to a certain extent, short-termism and infrastructure, critical infrastructure, are not very well together, right?
Venture capital, private equity, private credit, and we got back to the big sins. So, yes, I think it's better to be more modest and less shining, but more around in the long run. That is real banking.
Okay, very interesting, thank you. If you have now 100 million euro, what sort of bank, neobank, would you start? Where do you see the opportunities?
You know, for me, one of the opportunities is to set up a bank thinking around how customers live their lives. We all have different personas. And, you know, I'm a typical example, right? I am an individual. I have all these banking accounts, but I'm also a small business owner, and I have other banking accounts. No bank looks at my whole persona. So I would set up a bank. I know it's very hard from a regulatory perspective, but here is what AI can enable us today to create this bank that really looks at customers rather than looking at, the organization itself. Customers talk about this all the time. Most economies in the developed world are 90% small business owners in terms of looking at the employment. So imagine that you could set up such a bank that not only has the unified picture like a lot of, non-bank entities do this, but really having a bank.
It's music to my heart, what you are saying, because current technology, also AI, enables such a deep level of analysis of our clients, not seeing them as risks, but as individuals, and follow them and understand them. And if you lose this client centricity, you lose the real touch why you exist.
And I want to add one more thing. We all, at our age, and we are also probably taking charge of the finances of our parents or some aunt or uncle. How about that role? All of that should be in one place. That would be really a digital transformation.
Yes, and let's be honest, our children will probably never go to a branch, and they don't understand what is the difference between an app, whether it's called Zalando or CNN or KLM or Revolut or Snappi. They don't care. They just want convenience, right? They want understanding and convenience. David, 100 million, what would you do?
Okay, first give me the first just give me the 100 million. That's the first. That's the first step. A great idea, by the way. Okay, my daughter is 15 months old. She will never have a driver's license, and she will never go to a bank branch as an adult client. And the two are even interrelated, because in my mind, one of the typical, why she will never have a driver's license, there will be robo-taxis, and the two are even intertwined. Why? Because one of the implicit bank branches of the future will be the backseats of a robo-taxi. You have privacy, you have time, you have your smart glasses, and you can access Snappi. That's one thing, okay? I just wanted to point this out because you said our children and so on. The second thing is what I do with the 100 million. I do a digital-only licensed bank for affluent young people, basically private banking grade young people. Why? Because there is a vacuum in the market for this segment, and this segment is going to grow exponentially. Why? Because there is a silent revolution going on in the background, the great intergenerational wealth transfer, and it's a global process. What is happening? Approximately 200 trillion, not 200 billion, 200 trillion US dollars is going to flow in the next 10-15 years from the baby boomer generation to their daughters and sons, the millennials and Generation Z. This is very sad because a lot of this wealth will be passed on through inheritance. And we don't want people to pass away. So this is a sad process.
Okay,
but
David, just put 200 trillion.
Yes.
So just to put this into context, the balance sheet of the banking sector in Europe is around 35 trillion. Mm-hmm. The GDP of US is around 35 trillion as well, so 8 times bigger, yeah?
Exactly, yes. Total global annual US dollar denominated nominal GDP in 2025 was 110 trillion. Now, out of these 200 trillion, by the way, you mentioned the USA, 93 trillion, approximately 93, 95, will be in the USA alone. But But even in Europe, affluent baby boomers, youth, this is going to be big. And the financial services ecosystem, the incumbent traditional ecosystem, is unprepared for it. They have been masterful to serve the baby boomers, but now much of this wealth, again, unfortunately, is going to flow to their sons and daughters who are digitally savvy, who will look for digital excellence. However, due to geopolitics and bigger processes beyond banking, they will look for sovereign European trust and sovereign European bank-grade excellence in this arena. So I take your 100 million, thank you, and I work towards a banking license exactly like Snappi's banking license, and I build...
And you have no money left.
Here, here is where strategic patience comes. There is no free dinner. Banking is a very expensive business. One of the books I have been walking around here, by the way, there are excellent books in the Snappi library, really creme de la creme, like really the selection of the best of the best. One of the books around there is Banking on It, authored by Anne Boden. It's somewhere, I remembered where it's there. Anne Boden, Banking on It. Anne Boden, a traditional banker, deputy CEO of Allied Irish Bank, started up Starling Bank, S like Snappy, like Starling, in the UK in December 2014. She had to invest approximately 1 billion British pounds before Starling turned near balanced in terms of profit and loss. This is an expensive business.
And she was only doing the UK, right? I mean, it takes 7 years for her and 1 billion.
And Anne Boden was is a very, very smart lady, a committed follower of radical simplicity. What is radical simplicity? One market, UK only. One product in the first 7 years, only iOS. They didn't even serve Android. Only iPhone. Only British pound current account.
How much did she get from from Apple for this?
No.
No commission?
I know, it was her decision, her commitment to the philosophy, to the theory, to the practice of radical simplicity, full focus. Every additional product came to Starling through partners, through APIs in the internal app store of Starling. Can I tell you an anecdote from China, or later, or when?
Please.
Okay, later? Yeah? Go. Okay, I will tell you one thing. I mentioned you this robotaxi because it's a little bit related to this Starling internal app store, building a little bit of an ecosystem future. So, robotaxi, backseat, smart glasses. I have visited Alipay, WeChat Pay in the past 2 months, and I have learned a lot. And one of the things that I have always read about, but I never understood, is the app mini program infrastructure, which is a unique specialty of China. This app mini program infrastructure is genius. What they do, for example, the biggest ride-hailing app in China is not Uber or Bolt, it's called Didi. Didi Shuqing. That is the Chinese Uber. Of course, in China, they would say Uber is the US Didi. Okay, but don't get lost in geopolitics. So, Didi. And you can have the Didi mini program, a certain version of the Didi app running under WeChat Pay, running under Alipay. Now, there is a genius thing. If I put my Asian airline app, now I had to onboard to Asian airline as I was flying here, and if I put my Asian airline mini program under my Snappi app,
Yes.
I don't have to onboard the Asian airline mini program, i.e. app. There is a data synergy inside the app mini program infrastructure. It is genius. I onboarded WeChat Pay and automatically I could use Didi.
Fascinating.
Now, my idea is this. I am not sure about this. This is a little bit of just a vision, just a potential, just a scenario. When we slowly move in the next 20 years, step by step, incrementally, we will move from smartphone as the primary banking channel to smart glasses. It will be a 20-year process. My idea is that in the smart glasses, the prevailing operational system will be this app mini program infrastructure, not horizontally equally positioned apps, because this app mini program infrastructure harnesses and maximizes data synergy. And what I want to tell to Snappi, be conceptually ready for this, and when the opportunity comes, take the app position over the mini programs. You do partnerships already, amazingly. You are intuitively almost doing this infrastructure. Keep doing it and be ready, because with that, you can elevate a €1 billion value to a €50 billion value.
That's the aim.
Let me add that the next Snappi event, if you agree, Gabriella, is going to be on the topic. Me and David argue on that point because I disagree with the smart glasses. I think there is, it is one possible scenario, but the big question is, will we face an app collapse? So apps disappear completely. Second, what will be the next interface, and does it matter? How do you strategically position in that era of whatever is the dominant interface? What position do you take as a bank, as whatever, where your main touch point right now is on the mobile with one app, maybe some other distribution channels? It's a very big topic that is unfolding, and we can talk about it. But
Maybe we should have another session, because we are not going to cover everything. But what I'm fearing is, will we have the winner takes it all also in banking? Will we have only one or two players? Because the technology advantage, the capex requirements, the whole infrastructure, the barriers of entries are so high that we only have place for.
Yeah, look, in markets like China, where the super app model is very dominant, you have, basically two winning players. In Africa, with mobile money, it doesn't work. Can you hear me now? In Africa, with mobile money, which has been highly successful, like with M-Pesa, if you look at it objectively, it's a winner-take-all. The super app that M-Pesa has created there basically has dominated the market, and it's very difficult for others to play. Now, in the developed world, US and Europe, that is not going to happen for all sorts of reasons. Historically, we have strong incumbents, we have antitrust regulations, other regulation. It's not going to be a winner-take-all. There will be dominant players, and there already are. You can look at the JP Morgans of the world. You can look at, the UK situation, the Lloyds and so on. Yes, there'll be displacements, but the structure will not be very, very different.
Yes, this is a very, very hard question. I'm not sure about it at all. I tell you an anecdote. I am the advisor of the CEO of the biggest bank in Albania, a neighbor of Greece. And this guy is the CEO of this biggest bank for 26 years. So he knows the market. And every 2 months he gives me a speech how the number of banks will go down in Albania, how the market will get more concentrated. You know, small country, not very affluent, too many players, you know. In the past 3 months, what happened? 2 new players. So Empiria goes against such an experienced person. I would be very, very, very careful to judge this. One thing I know, the underlying payments infrastructure will have to be held in relatively sovereign hands. Christine Lagarde, past year, every day, what is she preaching? It's not a good word, talking about. Christine Lagarde, every day in the past 1 year, is talking about European payment sovereignty. What does it mean? A better alternative compared to current incumbent payments rails built on top of SEPA instant payments, kept as a market infrastructure in the background. So the infrastructure will have to be unified and sovereign, but on top of that infrastructure, I think there will be minimum oligopolistic competition, so 3, 4, 5, 6, 7 major players. Probably no winner takes it all, but I am not sure.
Relieved. Thank you so much. So I think we can close the subject of neobank. We have discussed quite a lot about trust, the UX, the experience, winner takes it all, importance, many aspects. We have not covered, of course, everything. I would like to move to AI. How will AI reshape the environment?
Whoa, okay. Couple of thoughts. I think this works, no? Yeah. A couple of thoughts on this aspect. I would say that we are early days. I just attended on April 1st, so I guess this Wednesday in Zurich, there was a big event called Generative AI Zurich, cross-industry. I was on the jury for the awards that were in different categories: innovators, enterprises, impact, and so on. So I have a lot of fresh feedback on what's out there and what's happening. First of all, it's early days. Second, we have moved in the last 3 months from talking mainly about generative AI and LLMs to talking about agentic economies and agentic processes and agentic businesses. Again, it's very early days. But one thing is for sure. If any business is thinking that you take AI, you change your processes in one department, be it customer service, be it compliance, be it marketing, be it credit. If you think that that is what an AI native business is, you're fooling yourself if you believe that. It is a good start. You should be doing these things to learn. You should go actually deep in certain areas to learn a lot. However, the true transformation will come by reorganizing your organizational chart, thinking that you are developing intelligence and you are orchestrating that intelligence. Let me make this a little bit more clear, and it's something that I have written about in a book that I'll mention later, back in 2024. It seems like 20 years ago. but it was on the topic of what it means to think like an AI native. So think of the 3 dimensions of every business. There's the customer layer, there's the enterprise, and then there's the ecosystem in which you belong. Now think of the many ways that you could apply AI in intelligent ways in these dimensions. There are multiple ways. We've all started with just discovery. LLMs, you know, discover things at the customer level, within the enterprise, within the ecosystem. But there's so much more. Product design, intelligence, there's a lot. So think of the kinds of intelligences that you can orchestrate in this matrix that you live in, and where is value going to come from? It's really going to come from becoming a business that is intelligent in a way that a galaxy is intelligent. Galaxy is intelligent at every granular level. It's intelligent at the roots of the tree. It's intelligent at the cloud level. It's intelligent in the waters, the oceans. It's intelligent in our bodies. But it's also intelligent in the other planets. It's intelligent everywhere. That's where you want to be.
I would like to ask a very big challenge, and I'm 100% sure we are all struggling with this. We are very busy at our job. How can we keep up? You know, what would be your recommendation to learn about all this? Shall we take 1 week off and withdraw and learn? Or what is the right way of all executives to keep up? To actually understand what we are missing?
So I think that for me, the way is you need to have like probably a coach, an advisor that is really dedicated in watching what is going on. Everything is happening very fast. Everything is interconnected. That is the challenge. It's complex. Can I use AI to hack the complexity that is out there just to understand what is going on, and then come and talk with you and tell you, give you the essential insights so you can, I can help you zoom out, and then you take it to your zooming in the specifics. So I think that that is a very valuable role. I'm talking my books. It's something that I do for some clients, because really you just can't handle it.
You can't cope.
Yeah.
David, AI, so
Yes.
how will it shape banking?
Yes. So basically, there are 2 major levels. First of all, I think the biggest bubble is crypto, but the second biggest is AI. Apologies for this. By the way, the 2 will burst through the same mechanism. They both use a lot of energy, and you see what's happening with energy prices currently due to geopolitics. I don't have to mention the specifics. Now, having said this, there is also very valuable reality behind AI. So there is an investment bubble, there is a valuation bubble in AI, but when this bubble will be gone, hopefully soon, remains the real value. And there is very important real value. So the first thing is exactly what I said, strategic patience. There will be this big AI bubble bursting in front of our eyes. Companies like Oracle, like NVIDIA, will be very intensively communicating about this entire process. You know what I mean. You know, we have to have strategic patience in the game. Even when this bubble bursts, we have to stand by our commitment for superior data monetization, for superior AI capabilities. Now, what we call AI nowadays, in my humble opinion, happens to be 3 different things with different consequences. The first is traditional software, rules-based software, vendors, investors, entrepreneurs, and even banks often like to call traditional rules-based software as AI. It's a label. Is it okay? It's okay to call it AI. Now, with that, we are already very good, but we have to keep going, and data monetization, turning payments data into instant, hyper-individualized, high-quality assets and liabilities, that's the name of the game. This is category 1. Category 2 is AI. Large neural networks. Large neural networks, not rules-based software, large neural networks. That is really AI, not only labeled AI, and that is where we have large language models, generative AI, agentic AI, and very soon we will have a boom in large behavioral models, not large language, large behavioral. That is robotics, from McDonald's to the self-driving cars and so on. Now, in this category, we have to be intellectually open, we have to be experimental in a compliant and controlled way. You know, we don't do very dangerous experiments in a bank. We do controlled experimentation in a bank, and here really we can be better than others. We can be more ready for agentic AI because we are more agile, because we read, understand, experiment, learn, cooperate more about it. Now, there is a third category which we often call AI, artificial general intelligence, AGI, machine superintelligence. Media is full of it because people, philosophers, politicians, decision makers see existential risks in it. Now, the issues, the problems, the existential risks of potential future, because currently we don't have AGI, potential future artificial general intelligence risks and philosophies, we don't have to solve it in banking. We can solve it in a dinner or in a cafe among each other informally. The real solutions we can leave for the United Nations, major governments, major agencies, and so on, global tech giants. In banking, the concept of artificial general intelligence today is a beautiful philosophic thing to talk about in a cafe. So the three different things what we nowadays often label AI require three different approaches.
Yes.
To today, what is the reality today is that over 50% of consumers are asking financial advice questions from the LLMs. And there's another 30% that plan to do that. And actually that over 50% is very satisfied with the answers. So this is what banks and institutions have to think of and strategically position themselves. Because yes, we say we have now the tech capabilities to offer personalized and customized advice and regulate it through this technology, but beware, because what are customers trusting and why and where are they? You have to go find them there. How do you find them and how do you offer that in this tricky environment? The interface is changing before our eyes. We are driving and talking to our chatbots, right? We are showing our elderly parents how to talk to the chatbots. People are asking, they're dumping their mind to these LLMs, And those LLMs are not selling products, right? They are selling hearing to your problem. And the problems are the same of humanity. You know, you want to earn more money, you want to invest better, you want to buy a house, you want credit for your business. It's the same, that never changes, right?
Yes, thank you. I have 5 more minutes and I have 2 more questions, so no comment further. I insist on these 2 questions because they are important. We talked about big trends, very revolutionary trends. What are the leadership qualities we all need to have to be successful in this? David, I will start with that.
Long-termism, transparency, honesty, and risk sensitivity. I know it sounds a little bit old style, but we want to bring it to the new world.
What does risk sensitivity mean? Do you need to be curious? Do you need to be agile? Do you need to accept that you don't know the future?
There is no free lunch. If you want higher returns in your bank on certain assets, liabilities, operations, and so on, it probably has some sort of implicit, explicit, shorter term or longer term, overlooked or consciously identified risks. And banking has been about risk management in the past 5,000 years. And when I look around Europe, for example, and I look at some of the licensed digital-only banks, exactly this area where I have question marks.
Okay, to be honest, I don't think that banking has been so exciting in the past than today. It's a fascinating opportunity to serve our clients better because we have better information, easier access through digital channels, lower cost. So I think it's a fantastic opportunity to bank the unbanked, and we need to see this opportunity and serve the unserved. So KPIs.
If I was asked to sort of say how a CEO today, like you, Gabriella, in the future should be, if you want, judged, or what would be the metrics to look at the success, I would say that they're all around intelligence. So are you empowering your customers in an intelligent way? How can you do that? Many possibilities. Are you going to provide them an agent that is next to them, but you provide that intelligence layer? So this is not just a conversational chatbot, right? Or are you going to let others provide that and you just be the one at the end of the transaction for the product? You need to change that. Change the mindset from selling products to outcomes, shaping outcomes from the beginning to the end of the journey. We've been talking about this, but we never really made it because we were focused on the end, at the customer experience. We have done very well with all the neobanks, but let's work backwards. You know this is going to happen. You know that each of us is going to have an agent. Are you going to provide it? How are you going to be involved in that? Second, what many hopefully are working on is in the enterprise. How do you make your enterprise intelligent? I know Nikos is working on that. That's the kind of intelligence within the enterprise that you're going to have to enable, and you'll be awarded on that, bringing your enterprise to an intelligent organizational start. And the third is you're operating in an ecosystem. Maybe you have ship owners that you work with. Maybe you have a logistics company. Maybe you have whatever you have. How are you going to help them become intelligent? An API might be a first step. An MCP might be another, next step. You have to bake intelligence at all levels. That is where you're going to be judged, not in the number of customers, not in the NPS score that most of the neobanks are judged right now, and on the unit economics. The unit economics are also very important, and they are going to be exponentially better if you have the right infrastructure that you have built in-house with in alignment with your strategic vision, and that intelligence will bring you network effects. I'm very excited about this.
Thank you, I agree. For the interest of time, last question. Imagine we are meeting again in 2035, so 9 years from now. Look back, what have we missed? What do you think we might have missed?
Okay.
Short answers.
Short answer. I hope we will not miss what we have the greatest risk of missing. And the greatest risk of missing, in my humble opinion, is the opportunity to use an ECB-granted license for really somehow doing the miracle and opening up across the European Economic Area, EU plus 3 other countries, where the license passporting theoretically, sorry, Christine Lagarde, works. So, you know, to make this theoretic passporting somehow near reality. Side note, from the 35 meaningful answers from leading bankers across Greece, because I asked them to ask questions, what was the number one question? How, when, which strategy, which tactics can bring, if Snappi, beyond Greece? That was the number one curiosity. So let's not miss the number one thing which we are in danger of potentially missing.
I have 3 things that are, you know, we might miss. One is, can Snappi or other banks serve AI agents as legal entities? You know, what if AI agents do become legal entities? Can you serve them? The second is, are your credit models preparing for a potential massive income shrink because of AI, and what that will do to the pipeline of, you know, mortgages right now are, you know, to the professionals like yourself, right? What if that class shrinks? So you need to model that potentiality. And the last that we haven't talked about is quantum readiness. We have hardware that is post-quantum proof right now. You have to be ready for that, and a lot of banks are not putting in the investments right now. They are risking data breaches from, you know, those that are hacking data to decrypt it. The Q day will not be announced. That is a very big massive. It's not only for banks, but we are more sensitive. So those are the 3 things.
Just to add to that fascinating discussion, my biggest fear is that we fail to be humble. We fail to be humble. We fail to serve our clients because we look too much at profitability, ignore 50 or 60% or even 70% of the society who struggle. And we are an infrastructure. We are a critical infrastructure. We need to find solutions to serve our clients. And I think a lot more than 20 years ago, the vast majority of the population remains unserved. And that's the biggest risk I'm seeing that we are having. I think we would need 5 more discussions to cover everything we wanted to tell you. Maybe we should start a series. I truly enjoyed this discussion. And shortly we are going to have some Q&As, but I know you want to say something, Effie.
Yeah, I would like to offer you, Gabriella, and you, David, a book that I've recently contributed a chapter. This is Branch Tomorrow by Brett King. It's a global look at what has happened to branches and ATMs. Very interesting data and patterns. Very interesting insights from different regions. I'm focused with my good friend Paolo Cironi on the European situation. So I'd like to offer this to you with a dedication, and to you, David, with a dedication. And I'd also like to offer this book to the Snappi library, to the Snappi community. This is a Wiley 2024 publication, The Fast Future Blur, Discover Transformative Interconnection Shaping the Future. This is written by the faculty of the Fast Future Executive. I'm a faculty there teaching the future of money and finance, and the chapter that I've contributed with Hari Aburi is Thinking Like an AI Native. It was written in 2023, but still very much the framework that we're using to think through this process, and I'm going to leave it to the library, to all of the Snappi community. There's a dedication in it to enjoy it.
Thank you so much, Shafi. You want to say something?
Thank you very much. I have a story about this book. A couple of weeks ago, I bought the digital version because the printed version is new, and I started to read it, but there is the little girl, my daughter, okay, she always came, blah, blah, blah. So I got to 3.5%. You know, Amazon shows where you are in the book, okay? I got to 3.5%, I will be honest. So 96.5 is missing. But what happened? In the past, I did some branch advisory, branch network transformation projects, training to retrain branch staff, and so on and so on. And you know, I have been thinking about the future of branches hundreds and hundreds of hours. But right away in the first 3.5%, I learned things which I could have used very efficiently and which I didn't know. It's a little bit sad that I only read afterwards, but this is the truth. So this is something very, very
book,
useful.
yeah.
And my homework is to bring 3.5% to 100.
Thank you so much. Piret?
Yeah, thank you. I just wanted to close this up before our Q&A. Efaristopoli. Thank you everyone who joined us here physically at the Hub and also via YouTube Live. You all will be actually gifted this wonderful book, and if you want, then Effie will be so kind and assign it to you. And actually, I'm very, very happy that Effie referred to credit models in the very end, because our next thought leadership session will be on 16th of June with Professor Altman from the United States, and we will be talking about credit models and credit. So thank you, and now we close the recording, so we will have a very, very inspiring and insightful Q&A. Thank you.
Hopefully.